All right, welcome to Margin Called. uh, Wednesday, I was babysitting my book. Yesterday, I got margin called. Not fun. So, I don't know how to discuss this because it's like what I want to express discombobulates. And then then I'm getting into the semantics of rebuilding my book. So, here. I got margin called yesterday. Equity value of one of my positions dropped like 20% all week. So far this week. Maybe more, but I don't hold the equity anymore, so it's a completely different story. Wiped off my book. If I'm going to go out, if I'm going to get liquidated, I'm just going to liquidate everything on my own terms. Maybe not liquidated, but the perspective holds. And I'm going to rebuild the book. So I'm long for next week, the earnings. And the short I had still running through the end of the year. But the leap I had, got rid of that to buy stuff out, sold other stuff off. This is the semantics, right? And then I was like, well, if I already know that I'm going to go long anyway, let me go long for next week. And then let me go long for way out in 2028. Now, with that leap, I effectively bought lower strikes for 20% more in premiums, theoretically. Meanwhile, now I got an extra 11 months of expiration or time on my hands. So theta will work or not work against me as much, right? So repositioning, I think, right? It's kind of the I wouldn't say opera or ballet, but the kind of reconfiguring where it's like, okay, there's an error here. However, semantically, it's like, oh, okay, I feel right, or the deltas are better, or this or that, right? So I think in this case, I went from like 50 deltas to, I believe, 78. IV's IV. It's going to be overpriced, especially because of the correction or a rally, right? So there's a difference, right? All of it's extrinsic, so extrinsic value right now, so it's kind of hard to, I guess, manufacture your own solutions. And then other than that, company book. So this is all my personal stuff. Company book, man, it's just kind of just chugging along, down a bit, 1% one day, up another percent the other day, whatever. I slowed down on the predictions markets, whatever you want to call them, binary options stuff on certain cryptos. I wouldn't say I'm still long stuff, but I wouldn't say I'm short either on them. It's just kind of like blasé, as I'm someone that just wants to throw a strangle on stuff and see how it works out. And just like certain capture points are kind of like, okay, even if this is easy to repeat over and over and over and over, the risk reward or the volume kind of seems to cannibalize any return. This will be very interesting, especially with certain options, let's say, on the Nikkei and the DAX. And I believe I had something on between the dollar and whatever the Canadian dollar. So there's that. I don't think I had something on yen. I wish I was short the commodities, especially because they kind of are working like fear indexes right now. I don't know if you use it as what do you call it, like a proxy for the VIX, but the value seems to be there, and who knows if we're going or leaving the dollar world. But in my kind of boomer commodity dollar, right? Petrodollar. I believe in the petrodollar. I believe in the military being able to enforce the value of this thing. So I don't really describe or that sentiment doesn't really make sense to me. Where you have an actual military power or private power to enforce the value of a currency. It's kind of strange how untethered certain like worlds or countries or the sentiments are from might versus the I don't know the swiftness of being able to like rework a monetary society or an economic incentive or this or that, all these variables, right? There's too many variables to kind of ration out, or who knows the value of what do you call it, like not bulls, like beef associates with the value of corn and so on and so forth, where you have all these strange things that are somewhat correlated, but correlated whatever, towards each other, where there's too many little things where it's like, does the rainfall in South Africa have anything to do with the production of soybeans, right? It's kind of random shit. That's kind of how I feel with like a bunch of these different cryptos, assets, companies. There's people at the top that have so much more substantial information than you, right? This insider knowledge they can't act on. Maybe they do in prediction markets nowadays, who knows. But there's a rationale that's just like, okay, even if you have all the information, you're kind of a prisoner. You can't even release any of this until someone signs off on it or whatever. And that sort of attracts me to some of that like DoD, DARPA type of investor profile. That it's like you're looking more forward at potentially more volatile and chaotic world, and position yourself, the country, whatever, in order to survive or live through that sentiment, that feeling, that world, that political rival, that military power that's antagonistic towards your political power, in the sense of, let's say, America in this case. So that's kind of it. There's a lot of changing paradigms while things still seem to be the same. So who knows what is right and what is true. I'm just trying to rinse and repeat, per se, systematically. Aside from that, it's just like there's too much volatility in these products. Meanwhile, over here you can be in a bunch of different crazy stuff and still see the same volatility. So I don't know, and that's kind of what is yanking me away from doing this. But systematically, it's like, all right, I'm just doing low volume when I could be buying 100 shares of whatever foreign name, or adding to the book comparatively to, hey, we have money to burn, let's try to figure something out over here, or let me try to figure something out over here. My business partner, founding partner, whatever, kind of the silent investor, right? I'm the key man. So there's a level of that where it's like, understand this to a degree. I'm fine with trading it. I'm very agnostic when it comes to product, trading, whatever. As long as it can make it work, but it just kind of like, it seems like it just drags. I don't know if it's just getting eroded. I don't know if it's worth my time, right? This kind of the attitude where it's like, it seems substantially more reasonable for me to spend my time trying to figure out how to rinse and repeat, or high repetition, low failure rate, high win rate, whatever. Trades within equity stuff, equities and their options, equity options, whatever, semantics, versus a binary event, whatever, on random cryptos, and right. And so you kind of like staring at this price chart of like, just wish list something. There's some website I use. It's like a price chart of like all these random cryptos, right? So it's like the same viewpoint I would assume a commodity investor or trader or whatever would be using. It's like, all right, I got the data here. Let me look at all the pricing of all these products. All right, I want to buy it. Blah blah blah. It's the same sentiment. So like, it's more irritating, I think. So much worth it. Like, all you care about is price and it falling within. And maybe it's just that the strangle seems to be like a very effective and repeatable mechanism. However, at the same time, it's just kind of irritating when you're like, oh, one leg blew off, but the other one doesn't make up for the leg that blew off. So it's kind of like, do you want an event? Do you want to buy or sell at a certain strike, and do you want to sell or buy or sell at another strike? Or I don't want to say sell, but do you expect this to be within this range and kind of just buy 2 strikes? Yes, no, and I don't know if that gets annoying or if it just irks me. And then there's this frustration that the capital doesn't deposit into the brokerage, let's say, to like 2, 3, 4 hours after the contract settles, and you're like, what the fuck is this? So I don't know. I just want to ramble here. The prediction market stuff. I don't want to say prediction market, forecast events, whatever. And just gauging price, and I don't know. It's irritating, but it's like, okay, this makes sense to me. It's a probability sign. Let me go for it. And then I learned this a few weeks ago. Don't really, if you're gonna like, semantically speaking here, try to outline like the following days that you're allowed to trade or invest, whatever. Trade, let's say. It's not investing. Now, what are you speculating at? Are you speculating right around the mid strike? Because this is kind of like an option book, or the tape per se. And is that worth it to you? Is that kind of like, all right, I can at least get a better return on the dollar invested or speculated, gambled, lack of better terms, versus like waiting till the day of or the night of, right after the other contract settled, let me go book my trades, right? So it gives me some like workaround room to trade on days that, so like I guess not Saturday, but basically Sunday through Friday. And it gives you days to kind of look at your computer for 20, 30 minutes and book some trades. But, it's kind of like, it's too mechanical for me to enjoy, I think. So that's all I got. Thanks for watching. Listen, subscribe, whatever. Peace out.